Welcome back. Now, while PGMs are exempt from Trump's tariffs, market prices are, or rather have been depressed for a while, but local mining CEOs are encouraged by the fundamentals of the basket and expect a rally in the long term. Joining me now with his outlook for PGMs is the World Platinum Investment Council's Director of Research, Edward Sterck. Edward, thanks so much for your time today. And as we get started, let's start there, right? Let's talk about the current economic landscape, basically an environment where there's so much uncertainty on the back of Trump's trade policies, that also just fueling economic growth fears. With that in play, talk to me about how it impacts the PGM market.
Well, thank you very much for having me on to discuss this. It's a pleasure to be part of the conversation. So, look, I mean, I think, there is a huge amount of uncertainty in the world at the moment. That's clearly concerning for people. But I think positively, we've done a sort of full risk assessment of this, and realistically, the structural deficits that we see in the platinum market at the moment are so significant that we can't really envisage a scenario whereby the tariff risks to GDP growth are material enough to eliminate those deficits. So as far as our forecasts are concerned, platinum deficits are embedded and they will persist even under a worst case scenario relating to tariff concerns.
So with those deficits in place where we are seeing demand outstripping supply, why aren't we seeing those prices really rallying? We have seen, an improvement here and there, but it doesn't seem like, we're seeing that big market rally.
Well, we are seeing some indications that there is significant tightness in the market, even though it isn't reflecting in the platinum price right now. So fundamentally, the deficits are or have been in place for a couple of years now, and the sort of shortfall in supply versus demand is being met through a depletion of above ground stocks. Now, what we're seeing now is extremely elevated lease rates. So that's the cost of borrowing metal over the sort of short to medium term.
Okay.
And we're also seeing a market that's in backwardation. And both of those are indications that there is a shortage of metal in the prompt market. Now, effectively, what we're seeing is, or what our assessment is that the owners of those residual above ground stocks are not sellers. They want to retain the exposure to the potential upside in platinum prices, but they are happy to lend out at the elevated lease rates that we're seeing. And so, in effect, when you can see people lending out for anywhere between 6 and 12% plus your credit spread, depending upon exactly what the lease rates are at the time, that suggests that as I said, the owners of those residual above ground stocks, they're happy to lend out in order to capture some of that financial benefit from the lease rates, but they want to retain their own beneficial rights to the physical metal and to upside potential. And in the meantime, the lending out of that metal is helping to balance the market, but there's only so long that situation can persist for.
Yeah, and talk to me about, we started off talking about tariffs. We also know that PGMs are exempt from Trump's tariffs. I guess that also just boosting the PGMs investment case, right?
They are, and I think we should be clear that PGMs are not fully exempt.
Okay.
So minted products are not exempt. So that would be things like bars and coins that are minted outside of the US. And equally, it isn't completely clear as yet whether sort of value-add products like wash coat for catalytic converters, which contain PGMs, would be exempt. As things stand at the moment, what we can say is that platinum sponge, and cast bars will be exempt from the tariffs, but not all PGM-containing products are. And in effect, I think what we're seeing as a result of these tariffs is this huge trade distortion that's resulted in a big flow of metal, and a number of different metals, not just PGMs, into the US ahead of the tariffs being enacted, is effectively accelerating what we're seeing in platinum, which is that the kind of supply-demand deficit is coming. But the tariffs are accelerating the kind of visibility of that.
And talk to me about the demand we're seeing in the auto industry for these metals.
Well, it's a good question, really. I mean, so PGMs are used in the catalytic converters for internal combustion engines, for treating the exhaust from those engines. And so, we're going through a period where we're seeing an electrification of the drivetrain, which in
Yeah.
theory should result in reduced demand for catalytic converters and therefore for PGMs. But that electrification process is happening more slowly than people have been projecting in the past. And realistically, the kind of US Trump administration's rowing back on the sort of environmental commitments kind of points towards a higher for longer internal combustion engine demand than even we were projecting with the slower ramp up of electric vehicle penetration.
In another market that we know uses these PGM metals, particularly platinum, is the jewelry market. And I came across, a headline that read that slowing marriage rates are decreasing demand for platinum. How's that playing out in the jewelry market?
Well, I mean, interestingly, during periods of economic uncertainty, typically marriage rates increase. So I think that headline is probably pointing towards something that has been a long-term trend,
Yeah.
particularly in Asia, but could change in the future. That said, whilst the bridal market is a really important component of platinum jewelry demand, actually right now what we're seeing is with the high price of gold at such elevated rates that consumers are beginning to be priced out of gold jewelry purchases, and so looking for alternatives. And at the retail level, platinum jewelry is, even though platinum has been trading at quite a discount to
Yeah.
gold for some time, platinum jewelry is still priced as a premium product because consumers view it as a premium product. But the price of gold has now become so extreme that we're beginning to see platinum jewelry, particularly versus white gold, being priced at the same level. And I think most consumers have given the option of a white gold product, which is only roughly 75% pure, or a platinum jewelry product, which is typically, 990% pure, they will probably go for the platinum over the gold. And equally for the for the jewelry fabricators and retailers, the price of gold has become a real problem for them. Their working
Yeah.
capital requirements have expanded dramatically, exploded almost. And so if they can pivot some of their product offering away from gold and into other metals, including platinum, then that's helpful to them in terms of improving their working capital requirements.
Edward, thanks so much for your time and just taking us through the dynamics playing out in the PGM market. That was the World Platinum Investment Council's Director of Research, Edward Sterck.